Bitcoin has been going sideways and holding strong above 90K. In this episode, I'm going to go over what levels Bitcoin could be going to next. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now, it's about 2:40 p.m. Eastern Time, and the price of Bitcoin is currently at 90,823. We're going to start off here with the weekly chart, and this closes in about 4 hours and 20 minutes. The Stochastics RSI have been going sideways here for months now. Right now, we have the possibility of possibly continuing to go up here with the Stochastics RSI. What I'm liking is that the 2-week chart is also low on the Stochastics, and the 3-week chart is also low on the Stochastics. I've been telling you that possibly with those 3 charts being low and coming up at once, it could make for a bigger move. Right now, we've been able to hold above the 100 moving average, which is at 86,486, and I would like to close above the 80 moving average at $91,905. Right now, we're in between these 2 moving averages. If we could break above this 80 moving average, then I feel like we can make a run towards this 50 moving average, which is at 101,423. Now, I also do have a speculation that I've been telling you guys for many weeks now that I don't think that we're going to go and test the 50 moving average until that goes to 100K or below. So if that's the case, we might still be dragging here for a couple of weeks. And you guys know I do have this weekly kind of like in a bear flag here that could bring us down to about 65K. Might have to drag this bear flag a little bit more, so we could continue to go sideways. You know, we could still make wicks up and go higher during the week, but still end up closing lower. We take a look at the 5-day chart. Yesterday we closed a red candle. It wasn't a red engulfing candle, but they were tweezer tops. Usually when you have tweezer tops, you usually come down. As you can see here, last time we had tweezer tops, we ended up falling. So we could have a green candle, but just not get above this red candle. The Stochastics are getting a little toppy. This is going to take another 4 days and 5 hours to figure out what's happening. But again, this is kind of also looking like a bear flag to me as well. On the 3-day chart, Stochastics are toppy. It looks like they want to roll over. We're fighting to stay above this 200 moving average, which is 90,211. Again, we closed tweezer tops here, so it's not looking good. This could possibly make us come down. If we lose a 200 moving average again, the probability of going down lower might happen. Now, in the 2-day chart, you can see the Stochastics are already rolling over. I was hoping that this was going to be some type of Adam and Eve double bottom. You see the V here and a rounded bottom. Right now, we're still above this 21 moving average, so we have a shot to continue going up. Hopefully, this could curve back up. We continue dragging sideways on the Stochastics, and we could try to make a move towards this 50 moving average at 97K. I've been calling a move to about 97K, close to 100K for a couple of weeks now. I'm hoping that now in January that could happen, but we have a monster resistance currently at around 94K. Anytime we touch 94K, it's like we're allergic to it. We come right back down. This is also looking like a cup and handle to me as well, falling wedge. So there's a lot of little patterns here on this 2-day chart that show that we kind of bottomed out temporarily, and we should be making a move higher up eventually. Now on the daily chart, see the Stochastics went that way down, but you can see that this is starting to make a curve here. If we could curve back up, then that would definitely be bullish. We're currently above the 21 moving average. That's actually what's important. Again, this kind of looks like a cup and handle. This also looks like a falling wedge. This is a falling wedge. This measured move could take us above this 80 moving average, which would be above the resistance of the 94K. The 100 moving average is at 98K. So I'm hoping that we can make a move towards there. The daily is not looking too bad as long as we could continue to curve up. If we roll over, then we are probably going to lose that 21 moving average. Now, on the other time frames, you see that the 22-hour chart is low on the Stochastics, so that's favoring the move on the daily chart. 12-hour chart as well is pretty low. 10-hour chart looks like we're on the way up in the Stochastics. Yesterday, I was a little concerned that this could have been some type of head and shoulder, left shoulder, head, right shoulder, and this measured move would take us back down to close to like 86, 85K, maybe even 84K. This is looking a little bit bear flaggish here. We wicked off the 200 moving average. It looks like we can't make it up, so we have to see where price range is going to be once we get back to the top of the Stochastics. If we cannot get above this high right here, which is the resistance currently at 94,738, then I could see us rolling over. We take a look at the 4-hour chart. Stochastics are starting to get toppy here. You can see these 2 wicks where we're not able to get above this 50 moving average, which is at 91,563. So it's not looking too good. I do have this in a falling wedge pattern. We slightly broke out. Now we've come back down again. This will take us back up to about 94K, I would say, almost 94K. So we have a shot here to get back above and try to test our resistance, but we need to break above with closing candles above this 50 moving average. If we continue to get rejected from this 50 moving average, then I could see us coming back down. Right now, our line of defense defense is this 200 moving average, which is at 89,356. If we could hold above this, we always have a shot to continue going up. Once we lose this, then it's possible that we could stay under there for a long time, just like we did previously here, where you can see since we lost that 200 moving average, we went to test it many times, but we were not able to get above until now. If we lose the 200 moving average, then I do feel we'll probably end up going lower in the price, because this is our shot. This is the first time that we went up above the 200 moving average with a lot of strength. Now, on the 1 hour chart, we have some bearish divergence here on the Stochastics RSI. We zoom in here, we see that there's a big wick here. This is just showing that we don't have the strength to even go and test the 200 moving average at 91,535. This is about to reset, so once it resets, we're going to see what happens. We're going to go and try to test this 200 moving average, and that's going to tell us a lot. Once again, if we get to the top of the Stochastics and we can't get above here with strength, we're probably going to roll over. And on the 15-minute chart, we see that the Stochastics are low. We're kind of rolling over, but eventually we're going to come up. We're about to come and test this 200 moving average at 90,686. This is looking to me like a double top here, and the measure move to this double top could bring us all the way down to about 90,300, which actually isn't bad. As long as we could stay above 90K, I think we're okay. I would say worst case scenario is 89K. We do not want to lose 89K. We lose 89K, then that's going to open up the ground for us to fall down to about 84K, 85K, and possibly even lower. As long as we can stay about 89K, we still have that shot to make it towards that 100K level. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.